market's going to do. Another clue is, remember, we could look at the pivot point moving average. If we see, and just by looking at this, we have more green candles almost, and we have higher assigned values. I would probably say, since the market closes closer to the high, here it closes closer to the low, but then what do we have here? A higher green, a higher closing high. We see more higher closing highs and more green candles in this sideways channel, don't we? We only have 2 down candles right here and right there, and the rest are green or up for the most part. So I would say that our moving average values are probably higher as well. So we have a higher slope in our moving average. So we got that going for us. We also want to look at this doji and see if the market closes above or below its high or low. Bang. A high close over that sideways channel, and this market takes off without any look back. Now, again, here we have a situation where this is a 15-minute time period, by the way, if you look here, and we have lots of dojis. So I want to pay attention to this breakout because there's a lot of indecision going on here. If this market breaks to the downside, I definitely want to jump on the short side of this. If the market breaks to the upside, I want to go long with this market. Where would I do that? Well, once again, as you can see here, if we have our doji highs and our doji lows here, a close below a low, we want to go on the short side. A close above, we want to go with an upside move. If the market breaks and closes above the doji high, we're also breaking and closing above that sideways channel. We can now really, instead of placing stops below this channel, we can do this. We can tighten our stop up to a stop close below that doji low. How's that sound? That's a little bit more cleaner and a better risk scenario, because I'd hate to have my stop down here where probably a lot of other people have their stops and then they are introduced to this word called slippage. But let's take a look. From what we've talked about so far, what do we want to look for? A close above a doji high to go long, or a close below a doji low to go short, correct? Okay. So let me ask you, and think to yourself, so far what we've talked about, sideways channels, dojis, the power of indecision, and the power of the reaffirmation of the market. With this last green candle that we see here, what do you want to do? Do you want to go long? So we'll ask, do you want to go long on the close or the next open, and then place a stop close only below that doji low? You can actually use that doji low, a stop close only. Now you got to realize that you're getting long at 129.09, and we've been in a sideways channel for, gosh, close to 1, 2, 3, 4, 5 hours. So we're going to probably anticipate this breakout is going to do something, and it should have a very large magnitude of a move. So with that said, keep in mind that what do we want to do? Buy here. Our risk is all the way back down here. What are we talking? 129. Let's round up. 129.10 to 128.85. We're talking 25-point risk, 25 pip risk in a foreign currency move. Well, I think we want to go long. Hopefully you said go long. So we're risking 25 pips using a 2 or 3 to 1 risk-reward ratio. We should see at least a 50 to 75 pip gain. And from our entry, which is 129.10 up to 129.62, that's 50 points. There's a 2 to 1 risk-reward ratio right there. Bang. And what happens? Immediate results ensue. No heat on that trade. Our first lower closing low, we're out of the trade.